If you're part of the energy trade and you have exposure to any energy stocks, you should remain calm and relaxed despite today's sell-off, especially if you've been watching the videos of the past 2 weeks. Until yesterday, we had acknowledged that we'd seen a 9-day streak where energy stocks opened in one color and then throughout the day transitioned into another color. Yesterday, we saw the first day breaking this trend where energy stocks opened green and closed even greener and substantially so. Many up 4%, the entire sector, I believe, up over 3%. Despite today's selling, and there was some selling, low volume selling, well below average volume in virtually every single energy stock, despite today's selling, we are still green on the brief 2-day week. And we saw such a strong move yesterday. And we've seen these strong moves, not just in the energy space, but throughout the market. And it's not uncommon after such a strong move to see a little bit of a pullback. But normally when you see a panic sell, which is what many people have been fearing today, you will see a little bit more volume than what is normally seen. Today, we saw lower volume. This indicates to me that a lot of the sellers may be washed out. They've been selling for a long time. They have been selling for some 3 months, every day, a lot of days, selling and selling. However, yesterday, they didn't have much power to keep things down. And they could have, towards the end of the day. We had a nice little lift off into the close. And like other days in this 9-day period of time, we never had that, reversal. Today we did, but today was lower volume. I believe a lot of the sellers have been washed out. And there might be a shift in sentiment to the bullish and buying side of things now that energy is above $70 a barrel. We'll see if it can hold, but it's looking pretty solid around here. And we're seeing what's happening with natural gas, a derivative of oil. So we should expect things to remain strong. Not just me saying this. Goldman Sachs says 80 plus. Bank of America says 80 to 100. It's not alone in this trade. There are some people who are looking at things objectively, not through such a hardcore lens that we're getting off of oil, therefore we should sell. The world's always changing. Everything's, we might not even be using phones in a couple of years, okay? Energy, pretty hard to disrupt in a short period of time. So the long-term thesis that has given us these multiples, and these companies are well prepared to keep producing products, not oil, beyond that advent that seems imminent even to me. So the long-term thesis is not appropriate. You have to be a long-term investor to buy energy stocks. You have to be a long-term investor to invest, right? Otherwise, you're a trader, you're buying a weekly option. You can buy options, but they got to be months timeline. Anyways, we're taking the long-term look on energy here. It remains strong. The long-term thesis is off the table. The price per barrel is quite high. $70 a barrel, it was just there in June when ETFs like OIH peaked at $245 a share, are now below $190, implying a more than $50 move, looks like $60 move. That's a 30% plus move just to catch up to where it was. But if Goldman Sachs and Bank of America are correct in their predictions of where the price per barrel is going to go, it's going to have to go even higher than that. So there's a lot of upside here. Remain calm, okay? We saw a massive move yesterday, a little bit of a low volume pullback today, It's nothing to be too concerned about. Let's focus on the fundamentals, realize that they are basically irrefutable. I invite you to challenge my energy assumptions in the comments below or via DM, but I would prefer it in the comments below. I prefer the public debate. And we're gonna take a look at something else, because we've been talking about energy a long time. We're sticking with the trade. We're not caring about the day-to-day. We are here. This is, in my opinion, where the money's gonna be made. Today I added to a position when it was up on the short side. I shorted a stock today when it was up. That stock was Apple. I heard someone give a case, Dan Niles, for a short position in Apple. And we've talked about on this channel how we just didn't like mega cap tech. It's been very expensive. And those stocks have continued to run. The exception of Amazon, they have not done poorly. Yes, they have underperformed the market, but I've been expecting them to turn around, and that just simply hasn't happened. However, I think the case might be lining up for Apple, and I'm not talking about the not super exciting product day today. I'm talking about the fact that sales were declining in December before the pandemic, and they've seen a quite substantial pandemic run and multiple appreciation pandemic run that has been caused by, work from home, stay at home, and interest rates. However, I see that now everyone has upgraded their devices. They're making marginal improvements to their product, and interest rates are expected to go up, in my opinion. So I see only negative forces playing them from a stock perspective. I love their products. I'm recording this on an iPhone. I use a MacBook Air. I have a iPhone 12 Pro, and my favorite device is my iPad Pro. So I'm an all-in Apple user. This isn't about the products. This is about the stock. And the stock's expensive. Looks like could just break a simple resistance right here and see quite substantial downside. So I've added that position. I feel the same way about all other mega cap tech. They have seen massive runs, been given very generous prices, but are very mature companies that this is what I have been saying for a very long time, is I don't consider these companies growth companies. I don't know who decide to keep using that term, growth companies. It's not 2005 anymore, okay? These companies are no longer growth companies. They have grown. They are adults. They are the biggest companies in the world. They aren't growth companies. Again, I reiterate, growth companies for me are companies like Editas, genetic engineering companies, Jumia, the Amazon of Africa, which is currently worth $2 billion, fraction of Amazon's valuation, yet exposure to quite a large market cap and a emerging or growing economy. That is a growth version of Amazon, in my opinion. So this is my line of thinking. I'm remaining very bullish energy. It's been hated for a very long time. It's well priced. The CEO of Schlumberger, one of my favorite energy companies, recently said he expects cash flow and margins to improve materially in the near and medium term. What else do you want? That's perfect. Okay, it's hard for a stock to fundamentally be damaged when you're expecting near and medium term cash flow and margin improvements. Okay, that's what stocks are about. They're about cash flow. I remain very bullish energy, regardless of what happens out here and in the broader market. I'm sticking with energy. Apple, mega cap tech, I am staying away from, and I am now short small position. Okay, I'm not saying we're going rah, short, Apple, fuck Apple, they suck. No. Apple stock is a little expensive. They seem to be, at a very good point. And considering the stock is expensive and at a very good point, it might get a little cheaper. And we're just playing that. So that's the deal with today. Remain calm. Okay. No reason to worry about energy on one day after a massive day yesterday. We'll see what happens. And until next time, peace out.